Hello, YouTube, and hello, traders, and welcome to TradePro Academy's YouTube channel. I hope everyone's doing amazing and is ready for this week's video. So I'm Victoria from TradePro Academy, and in today's video, what we're going to be talking about is something super interesting. It is the topic of actually making a paycheck consistently in the market using options. Now, you guys may be thinking, well, this is some gimmicky BS video of,
oh, okay, just buy this or do this and you'll make consistent income.
No, this is a strategy, right, around one singular index on the options that, if you learn, is going to be the only thing that you're going to need to actually trade in these markets, right? Now, there aren't going to be a million trades a day. There's going to be maybe a few trades a day. Some days there might not be any if you just focus on solely this asset. Why am I making a video that explains how to make $250 a day? Now, this is sum that a lot of people are comfortable with, right? This is a sum that is very scalable, right? It's easier to scale rather than saying $1,000 a day, right? No one starts making out that much money, right? Realistically, if we use 220 trading days throughout the year, right? I'm accounting for some losses, some non-traded days, because technically there's 250, right? It is still 55,000 US on an annual base of extra income. 25%, right, of the US population makes under $52,000 US a year. Now, about 50% makes under around $92,000, right? So if you scale from about $55,000 extra, even if it's $40,000 extra annually, right, you can scale to be earning a large majority of what the average US income is. So that's exactly why I'm choosing a $250 amount daily, because it is a scalable and it's a very easy to understand concept and number. So realistically, if I'm taking 30 to 35% winners in these trades, that means that I only need about $800 to $900 of capital investment to actually trade this strategy. So if that has proved to you why you should actually listen to this video and pay close consideration with your pen and paper, taking some notes, then stick around for this intro and I'll see you guys shortly. So throughout this video, we're going to be covering 4 different topics. We're going to be talking about options brokers. We're going to be talking about charting platform. We're going to be talking about strategy and examples of trading the SPY, the only asset that you will need to trade in options on a consistent basis as a day trader. And finally, we're going to be talking about risk management, execution, and a lot of those pieces, adding an example at the end of how we do it on a daily basis. So let's get ready for this. In terms of brokers, step number 1, you're going to have an options broker, right? That is going to be the most basic case for any kind of trading. Now, for options, I use Interactive Brokers realistically. So Interactive Brokers is great worldwide. I'm in Canada. So Interactive Brokers is going to be the weapon of choice, if you will, because we don't really have access to that many different platforms, right? TOS is a solid one as well in the States, but I've heard that you actually have to type in the symbol each time. And honestly, like that's too much work for me, right? Like I just want to click, boom, it's there. It automatically transfers from my options chain to my trigger area, my execution area, and I'm good to go. So Interactive Brokers, to sum it up, is the brokerage and platform that I like to use. And then part 2, charting. So this is where we start to dive into this strategy piece a little more, charting. So, okay, we talked all this nonsense about what it takes, what it is, why it is, but how do we actually trade this strategy, right? How do we actually configure $200, $300, $400 a day out of just the SPY? So let's take a look at my computer first and we'll break it down there. First things first, as we're looking at the screens here, we have to understand the concepts that we need to know when it comes to charting and the strategy, right? So there are 3 main concepts with this strategy, right? We have to understand technical analysis portion. We also have to talk about correlation between, right, different indices and different pieces, right, that we're going to explain. And then finally, we have to understand which options to select and also risk management. So why don't we dive right into that? We're going to be talking about the technical analysis portion. Now, on my screen here, you guys can see we have the technical analysis portion of the SPY, mainly on the left-hand side. We also have one of the correlation aspects that we're going to talk about as well. And we also have the triple Qs, right? Another correlation aspect. Now, when it comes to the charting here, when it comes to reading these charts, we do have to understand technical analysis portion first. Now, the technical analysis portion comes in a few different steps: multi-time frame analysis, volume profiles, our support resistance areas, as well as our volume. So there are a lot of different moving parts, and we're going to explain from start to finish how this strategy necessarily works, along with the correlations and option selection. So why don't we dive right into that? So I'm going to be looking at the screen here a lot and breaking things down for you. So here we generally have, this is what my main layout looks like. When I'm trading the SPY specifically, this is what my main layout looks like, because what I have here is the SPY on the 5-minute naturally, which is the asset that I do want to trade. And then we have the advanced decline here, which I alternate with the UVXY, right? We'll talk about those correlations and another correlation right here, triple Q. But let's start off super simple and break down the actual strategy components in itself. So with the SPY, what you're going to have to understand is that there are levels, there are volume profiles, right? And there are trends that we ideally want to play. Now, there's two ways to do this, right? There is to play the extremes on the SPY or to play the trend. Now, if you can find a trend, right, it becomes a lot easier. The best way to find a trend is find where a pivot point would be and set that out as a long short area, and you're only long above this area and anticipate a move to the upside. So why don't we zoom out on this, because it does require some multi-time frame analysis. We can't just stick to the 5-minute, right? So let's say you're looking at a 15-minute or an hourly chart to start. What I typically do is I have these volume profiles here, right? We do have a amazing volume profile video you guys can check out to understand that a little more. But with volume profiles, I have one on the right-hand side and these little intraday ones. Now, the one on the right-hand side is used mainly on an hourly chart or on a 15-minute, where I can find large ledges, and you can find key areas of support resistance based on the hourly chart that you do want to highlight. All right, that's exactly what we do here. You can see I've drawn many lines, and I've outlined this blue brick area as a key resistance. So the first steps first in this strategy, we're going to have to draw our levels based on both volume profile and key support resistance areas. So if you find most recent bottoms, right, these double, triple bottoms here, most recent resistance points, most recent points of inflection where the price rejected that area, those are levels that you want to consider and put in your chart. Next thing I'm going to do is I'm going to drop down to a smaller time frame here, maybe a 15-minute. I'm going to take note of what had happened over the past few days, right? You can highlight what some of the big levels are based on your hourly, but what had happened over the past few days, and where am I going to sustain bullish versus bearish momentum? So this is today. Yesterday we had a nice move. The day before was the Fed announcement where we had a drop and nice move, right? And I want to take note of where the prior day's tops were, right? Prior day tops, prior day key support resistance areas. So we held this area as support and resistance. So that's an area that I do want to outline, right? We held this area as resistance and support. That's another area I want to outline, so on and so forth from the prior days. I then look at the volume profile in this 15-minute and identify where my big distribution blocks are, because you can see from the prior day, it's no surprise that we have a very large distribution right here, right? These large distributions suggest that if we can get above the lower band of this distribution, we are most likely going to see the top band of that distribution from the prior day, if we're not already within this quote unquote balance. So that means I can outline that area as my quote unquote pivot. Like I mentioned, I'm looking for long or short above or below the pivot. So this is where the strategy comes into play. If we move above the pivot, I'm going to be long, aiming for the tops of the distribution, right? If I'm below the pivot and I reject that resistance area, realistically, I'm going to be aiming for shorts below the pivot into the next balance, right? Let's find where the next balance is. The next balance, if we zoom out here, right, we can see it's somewhere within this area based on the prior day and also the day before, right? So the short balance, if we start moving lower, you can see where the volume profile big blocks are, right? It could be a little higher as well, but generally in that area if we start moving lower. So the strategy is, in the first 15 minutes, am I going to move above or below the pivot, right? Am I going to close a 5-minute candle above or below the pivot, right? And does my moving average, the 20-day moving average EMA, converge with that, right? Can I ride this moving average up? Because realistically, we start the day right around here, right? Weird start to the day. We've already popped, right? And we're trying to pop through that pivot area. We finally get the move above it, and that dictates this is the long side, and we can look for either pullbacks into that moving average, which take a long time to happen, or just get long on the break and hold of our pivot area to test the top of that distribution. What happens at the top of the distribution? We have two fade areas, where this is where we play the extreme and look to sell, right, or buy puts into these rejection points, right? So I use massive levels that reject as my extreme levels, and then usually I'll try to play the trend based on the pivot. So the pivot is based on the distributions, right? Based on key support resistance areas and the moving average. So if we're sustaining closes for the first 10, 15 minutes above the 20 EMA or below the 20 EMA, that's usually the direction that the trend wants to move originally, right? In the first place to get that starting position. So I use a combination of support resistance and volume profiles, right, to actually get this strategy out. Now, if you want to learn a little more about this and deep dive into it, we do have a lot of blogs on it. You can come check us out, community.tradeproacademy.com, to get a deeper insight into our Discord and exactly how we play these. But this is the general basic rules that I abide by, right? Above my pivot, right? If I get a close above that pivot, I'm going to be looking for longs if we meet the criteria that we're above the 20-day moving average, right? Below, I want to be below the average and look for pullbacks into that average in both cases if we can trend. Otherwise, look at big distribution blocks for massive support resistance areas to play off of, right? And then we look at volume at the bottom here, you guys can see as a confirmation tool. So first 5-minute candle, right? Some solid volume, it always is. And we get this big beast of a candle with very fat green volume. That starts to dictate that we're going to actually start turning back to the upswing. So each time, right, volume starts dropping off on the sell side and we start picking up some kind of volume on the buy side, right? And then finally, decent buy side volume off of that bounce. And there we go again, right? So 2 tests of that moving average here, right? That's what we want to consistently continue, right? It is a little harder this second time because we're at that resistance that we could have played twice. So in terms of basic technical analysis, right, that is the majority of what I do for the SPY. That is the strategy for the SPY. Now, there are other things that we could do to correlate. Remember, we talked about correlations. Now, the SPY is an index that is correlated to many different assets, right? It's correlated to the triple Qs, which is NASDAQ, right? They share a lot of common stocks, so they tend to move together. It is inversely correlated to the VIX, right? Volatility, or UVXY, which is a tradable instrument. And it's also correlated to the advanced decline line. So I use an advanced decline here, as you guys can see. Now, this is out of all of the stocks, right, close to 6,000, how many are advancing versus how many declining, right? If I have 3,000 right now advancing, it's solid, right? It's above zero. It's fairly strong. I want to keep to the upside. If I was rising in the S&P, for example, if I was rising in the S&P, but the advanced decline line was around 0, 300, 400, that is weak buying in the broader market, and it's probably getting propped up by a few individual assets like Apple or Tesla. So I'm looking at the advanced decline line here, right? And in the morning, great, very strong move from negative territory. And once we passed positive territory on the advanced decline line, we passed our pivot threshold on the SPY. That is the turning point, right? Advanced decline didn't look so hot at these tops, especially on the rebound of the top, right? Look at that. We retrace the tops and advanced decline is terrible, 1,100. Last time we were at this area, it was 1,800. That is a potential short opportunity for a fader, right? This was a fader opportunity. This was a little fader opportunity, but overall, advanced decline still holding strong. Once we start moving back up, right, just keep to the long side. Look, we can't break advanced decline lines of 560. It's still positive while we're holding higher lows in this market at the 20-day moving average. Correlation, check, right? That's how we like to play that. UVXY, another correlation. UVXY is volatility, inversely correlated. Volatility continues to go up, then the market's probably going to go down. Volatility gets crushed all day, we're probably going to see some upside movement in the market. Look, recently we had a stalling out of volatility. We are no longer falling. The market's no longer rising. We start turning on volatility because we haven't seen volatility this low yet, right? We saw volatility at its lowest point today at about 12:45-ish p.m., right? Market stalled out, volatility stalled out. We could see that turning point where markets drop and volatility turns up. And then finally, the last correlation is going to be the triple Qs. So the triple Qs are another ETF that we can trade, right? We can trade that as well, but they're tech names, right? Tech names usually do lead the charge when things are going well or poorly. So if triple Qs is just ripping today, like, look, we can see where our cursor lies, right? Triple Qs break the threshold while the SPY is still kind of just dancing around, right? Triple Qs break a huge resistance. SPY is still at an area where we can buy around our pivot. So it's very important to have these 4 general correlations in your options trading. Now, finally, to understand the option selection process, if you are a day trader, right? If you are day trading, then in terms of option selection, SPY and triple Qs have 3 different expiries throughout the week. Now, I'm pretty against trading the 0 day to expiry because it's more of a gamble. It is higher risk. So on Mondays they expire, on Wednesdays they expire, and on Fridays they expire. So as an options day trader, if I'm trading on a Monday, I'm going to be trading Wednesday or Friday's expiration on that week, right? Rather than trading the Monday. So I want to avoid that 0 day to expiration so I can keep my risk a little tighter realistically. So let's talk a little more about the option selection, right? What we have to understand is the expiration. We also have to understand which strikes we're choosing, right? What kind of payment we're going to take in, and then also the risk management aspect of it, right? How much are we risking? How much are we willing to gain? Now, in the example that I'm going to show you towards the end of this, right, you probably already saw one of the examples earlier on, but in this example that I'm going to show you guys at the end, right, we have to understand that these trades, they don't technically last that long, right? If things go right, they can last and trend all day, but on occasion, right, they're just quick moves. So with that, we have to understand that the options do lose value quickly if they turn against you. So we have to be nimble. That means that in terms of option selection, we talked about the expiration, but what about the strikes? Strikes, I usually look for around 30% delta on my options price, right? And I don't like to exceed $1.40 per contract necessarily with SPY and triple Qs because they are overall very cheap and really, really liquid. So we look at the delta between 25 and 35 delta, right? If you're trading things that are closer to a 0 day, a 1 day to expiry, you want to go closer at the money. We also look at volume and open interest. Now, typically it's going to be very high on the SPY, so it's not necessarily something that you have to concern yourself with. But if we're talking about other assets, right, you might want to look at the open interest and the volume, make sure that they're very high. And then with that, we can select our option and we set limits. So the way that I like to do it in the risk management aspect is if I have a level, for example, our pivot, and our pivot is at a certain level and the SPY calls we're trading, let's say at $1.10 at that level, right? If we should pull back, they're going to be trading less than $1.10 because that's how options pricing works, right? At the same level, they're not going to be trading what they were 10 minutes ago. There's a time decay value that has to be absorbed in that. So what I'm going to be doing with my options selection actually is if I have an option that costs 110 at a certain level, I'm going to go 105 as my entry, for example. My risk is going to be 20%. My take profit about 30% starter to take half of the position off and start scaling from there. So like I said earlier, you only need about $850 or so to make that $250 on a 30% ROI on that trade, which is not that hard with options and not that hard with the SPY, especially because there's a lot of opportunity in that. So with that, I want to wrap it up by just going through step by step an example with you guys that we're going to pop up on the screen right now. So I hope you guys enjoyed this video. Make sure that you drop a comment, hit that like button, hit that subscribe button, and let us know what you thought about this video. We'll see you guys right after at the end of this example and next time. So thank you all for watching. I hope you guys enjoyed the new ambiance of our studio here, and we'll chat to you guys next time.